It's a topic I like a lot. It's our fund. It's a great little story, and I'll take you through it. Again, I'm Rob Antoniades, one of the founders of Information Venture Partners. So who is Information Venture Partners? We're a $106 million fund. We are on Fund 2. We found our genesis. We grew out of Royal Bank of Canada. We ran the RBC Venture Partners team there, both my partner and I, Dave, for over 10 years, from 2004 to 2014, and when we created our franchise. It is an exclusively B2B franchise, so we invest in technologies that sell into financial services, and we'll go through the detail of that in the next slide. They're all recurring revenue models or reoccurring revenue models. We look at companies with about $1 million of recurring revenue, so that's early stage. It's not seed or pre-seed, but it's late seed, C+, or Series A, or we can go later. We're based in Toronto, but we're a North American fund. Historically, we have been 50% US, 50% Canada, but more recently, at least in this fund, it's been mostly Canada. So the team has been working together now for 10 years, over 10 years, and the three partners have a half-century of venture experience. It's unfortunate, but it's true. These are the four areas that we focus on. B2B FinTech, that is technologies that sell exclusively into financial services, whether it be banking, insurance, asset management, capital markets, payments, loyalty programs. And those are some of the areas that some of the examples of things that we look for. SaaS, or enterprise software, where financial services is a key vertical. So they may only represent 10 to 25% of the total revenue base, but it's an important vertical. Cybersecurity, clearly important to all financial institutions. And last but not least, financial applications. Things that sell into the office of the CFO or into the finance organization. Could be accounting, could be budgeting, could be spend management, whatever it might be. And you'll see some examples of our portfolio companies in each of those. We dabble in payments, so we don't actually invest in payment companies, but we invest in the ecosystem around payments. One of the things that you will note about our fund is it's highly concentrated. We make no more than 12 or maximum 14 investments out of any one fund. So that's because we're hands-on investors, and we spend a lot of time with our portfolio companies helping them grow. So I'm one of the two founders. Dave Unsworth is the other. Carrie Golden is our CFO. She was a CFO of a public company. We took her out of retirement. She's a former VC, a startup executive, general manager of a large corporate. She's a fantastic third partner. And most recently, we've added Mark Altshuler. Mark Altshuler was one of our CEOs. He sold his company to IBM and then eventually started Watson inside of IBM. Most recently, he ran business analytics, a $2 billion P&L. He left in June and joined us as an EIR, and he spends 2 days a week with us and our portfolio companies. Alex, Kate, and Cavi support us. In 2 weeks' time, you should look for an announcement from us. Our third investing partner will be named and introduced. They will be New York-based, and will be having a presence down, and we'll establish a presence in New York. Not many people talk about their returns. We'll talk a little bit about them. To date, with our first fund, we have returned over 3x net. At book value, it's over 4x net. At market value, it's over 5x net. We are long-term investors, so we hold our positions for 8 to 10 years, depending on the situation. We're not in for 3 to 5 years. We're patient, and as a result, the IRR takes a bit of a hit, but 22% IRR over 12 years puts us in the top quartile, 5 times or even 4 times TVPI, puts us substantially ahead of most of the funds, including the top Valley funds. And that will undoubtedly be a top decile or even better result. Why is it that we've been able to do that? As I said, we take a long-term view. We've had opportunities to sell many of our companies along the way, but we haven't. Adaptive is an interesting example. We invested in that in 2007 when it was $1 million of revenue. In 2017, it broke through 100 million. In 2018, it was on track for 140 million, 4,000 customers, and 2 days before our NYSE IPO, Workday bought it for $1.6 billion. This is an example of a financial software company. It did budgeting, planning, forecasting for the mid-market, eventually upper mid-market, and then the enterprise. Verafin is another example of a company that we've invested in. This is an original AI company. This is AI going back 12 years. It does anti-money laundering and fraud detection software for the banking market. We invested in 2009. We turned the business model upside down. It was a traditional software business, perpetual software. We converted it into a SaaS business. We saw much more value in that, started growing it. It's now approaching 100 million in revenue, highly profitable. 1,800 banks as customers only in North America. We haven't even embarked on our international strategy yet. eSentire is a company we've been involved with since 2013. We sold it last year to Warburg Pincus. It's cybersecurity. Verafin was an example of a B2B FinTech. This is an example of a cybersecurity play, managed security service provider. If you look at the bottom there, it shows you some of the value add that we provide. We come in and we roll up our sleeves. Q4 is a recent investment that we made about 3 years ago or so. It is the leader in investor relations software. This is a perfect example of the B2B. We have a lot of customers in financial services. It's growing nicely. We recently announced the $38 million investment by Napier Park, and that's probably all the company will ever need as it rapidly approaches break even. In 3 of those 4 companies are Canadian. You will find our logos on this logo salad. This is a fraction of the companies that we are tracking in Canada. So we are tracking about 700 FinTech companies. We see them at all stages. We're often the first call. But this is representative of the types of companies that you should expect to see in Canada, whether it's core banking or insurance or capital markets or PFM. We're tracking it all, and we intend to continue to nurture some of these relationships. And once they reach that $1 million of revenue, that's probably when we'll get interested in making those investments. There is no way we can put all the logos up, and so if you don't see your logo, don't get mad. We always get calls, so we stop publishing this because people say, our logo's not up there. Well, we can't get it up there. I think Peggy talked a little bit about the Canadian ecosystem. I'm going to talk about it as well. Consistently, Toronto is identified as a top 5 or top 10 FinTech hub, as is Zurich. And one of the reasons I'm here is to see what's going on in Zurich. But it is consistently top 5. And in this case, it's ahead of New York and San Francisco, as it often is. And the reason for that is that there's a few things happening in the Canadian marketplace that make Toronto unique, or the North American marketplace that make Toronto unique. It is the second largest financial hub after New York. It is also the second largest IT hub after the Valley in San Francisco. So the combination of those 2 makes it an ideal place to build, nurture, create, ideate FinTech companies. Here, this gives you a listing of some of the financial institutions that we have. We have 2 of the world's largest life insurers. The top life insurance company in Canada is an LP of ours. We have all 5 Canadian banks, or top 5 Canadian banks, are headquartered in Toronto. All 5 are in top 100 in the world based on either assets under management, revenue, or market cap. In fact, most of them are in the top 50. There's 3 in the top 25, 2 in the top 10 in North America. The largest bank in Canada is a limited partner. The largest FinTech in Canada is a limited partner. The largest financial conglomerate in Canada is a limited partner in our fund. There's a concentration of financial services in Canada, and that's why we're very happy to be located and headquartered there and serve the North American market. You all understand, and this was mentioned earlier, Canada is very open to immigrants. As the U.S. is shutting its doors, we're not. We understand that the future of the country is in knowledge-based industries. It is not in the mining and the forestry that Canada is best known for. And so the government's spending billions of dollars in putting in the infrastructure and fundamental research and AI. We've developed AI labs, Montreal, Toronto, Edmonton. We're putting programs together with the university system to graduate thousands of undergraduate, graduate, and PhD students in AI. So that has caught the attention of the leading technology brands in the world who have put major emphasis in building AI centers of excellence or headquarters in either Toronto or Montreal, the likes of Google, Facebook, Amazon, and others. But to understand Canada, you probably need to understand the US market. And so this is a graph that is commonly produced to show the FinTech activity in the US. And what you'll note is that the FinTech activity in Canada looks virtually identical, but proportionately smaller. We're 1/10 of the economy of the US, and we're in general slightly less than 1/10 the FinTech activity as well. But we've got access to both of those, and that's the thesis of our fund, is to be the first call in Canada and selectively be a great partner for the US. So just to summarize, Dave and I have been working together. We are great partners for entrepreneurs. We're entrepreneur friendly. We don't get too distributed. We focus on our portfolio companies. We lead or co-lead every deal. We roll up our sleeves and work with you, the entrepreneur. That's resulted in a track record that is second to none, at least in the sector, certainly in Canada, but certainly top decile in the US as well. We have unique position in Canada, which we leverage. We use that to get proprietary access to deal flow in the US. Partners that we have had in the US include Bessemer, JMI, Norwest, Flybridge, DFJ, a whole bunch of US partners. And while we continue to invest in the US, we actually believe that the Canadian market is uniquely positioned. And so as we go out in the next quarter, Q1 of 2019, to raise the next fund, hopefully 125 million US, people will remember and agree that it's a great place to do business. And so that is it. I will open it up to any questions, if you have any. Yes?
Are you investing in Europe?
We don't invest in Europe.
Why not?
Because
The size of the target companies you're looking for is ideally also found in...
It is, yes. So our strategy is, let's establish the New York office and be closer to that. The challenge with Europe is the distance. So because we're quite active in our portfolio companies and we spend sometimes, we're there a couple of days a week, it's difficult for us to get on a plane, come to Zurich or London or Amsterdam, fly right back, and then come back the next week. And so that's why we're limited to North America for the time being.
Okay, great. And you're here this afternoon, right, Rob?
I am, yes.
Great.
Thank you.
You actually were born in Zurich, too, you mentioned once.
I'm born in Switzerland, yes.
Switzerland. There you go.
I'm Swiss born. I'm born in a village called Maglingen,
there you
just
go.
North of Biel, where the sports schule is.
Another Swiss-Canadian connection.
Another Swiss-Canadian connection.
Great. Thank you so much, Rob. That was
And
perfect.
that's it.
I'll take that over. Cheers.